Is Bitcoin ready for $50,000? I'm going to give you guys my trading plans for Bitcoin, Ethereum, which looks a little less interesting, and also for Solana, which is looking very interesting for a potential trade idea as well. In last week's weekly outlook video, we were discussing this monthly range over here on the Bitcoin price. And at that time, I was telling you that if we would get a retest of this 3-day breaker block that we put in over here with this smaller supply candle, that I would be looking for long positions on the Bitcoin price, because we also had this quarterly level of the range over here. And just look how beautiful we bounced exactly from that key level. Now, if we move to the lower time frames, to the 4-hourly time frame, we can also identify something very interesting, because we can also identify the range that we have over here. And as you can see over here, this is the long position that we took, that I also gave to you guys in last week's weekly outlook video. And obviously over here, we can see the exact trade signal as well. But what we can see right now is that Bitcoin broke back inside of the range and has shifted structure over here to the upside. Why do we need to break through this high and not this high or this high? Because this is the highest high that we put in after this fresh low compared to this fresh low. So this is the high that brought us to this range low, deviation low, before forming a new high over here. Okay, so as we can see on the 4-hourly time frame, we opened and closed 2 candles above the high that brought us to the low. So right now we can see that we have a deviation of the range low over here that is being confirmed by this break of structure over here, which is some very, very nice confluence. So based on range trading, whenever you get a deviation of the range low in confluence with a break of structure back towards the upside on the 4-hourly time frame, technically speaking, the next target, the next objective should obviously be the range high. And that's also my main target this week for Bitcoin, alongside potential new yearly highs. Now, if we are going to target, for example, new yearly highs over here on the Bitcoin price, where we also have the pivotal monthly mid-range level, where are we going to position ourselves? Now, what I do find very interesting over here is if we get the fixed range volume profile over here of this entire range, we can see that we have the value area low over here. I actually should get the volume profile over here, of course, because this is where the range starts. But what we can see is that we have the value area low of this entire range aligning with this massive previous support area that we have over here, right? So the value area low, definitely something interesting. All right, now if we also take the fixed range volume profile of the previous week, and we start at Monday at noon, then all the way towards Sunday last night, we can see that this is not very, very interesting, but we do have the point of control aligning with the range low. All right, but definitely that fixed range volume profile of the entire range over here is very, very interesting, because what we can see over here is that if we quickly remove this long tool, is that this value area low aligns with this bullish fair value gap. So if I quickly remove the value area low and I apply this bullish fair value gap on the 4-hourly time frame, this is definitely very, very interesting, because we can see value area low aligns with that bullish fair value gap. Bullish fair value gap aligns below this quarterly level over here, and that's where we have sell side liquidity resting beneath this low over here, right? Because the people that identify this fake break of structure and FOMO into buy positions on this push up, or FOMO into buy positions on the pullback down, most of them are putting their stops beneath this low. So that's where we have sell side liquidity resting. So personally, what I'm expecting for Bitcoin is for Bitcoin to hopefully give us an early week pullback, mitigate this hour 4 fair value gap, and then push up towards that range high first. This is my first massive objective for the Bitcoin price. All right, so personally, I will be looking for long positions inside of this bullish fair value gap over here. Invalidation is pretty clear, because we don't want to take out the low of the deviation, right? Now, the second scenario is that we are going to go for the liquidity pool beneath this low over here. Now, why is this an interesting liquidity pool? We have to get into the mind of the retail traders. The retail traders can identify this range. The retail traders can identify this range low right now, and they can also identify the deviation of the range low. So many retail traders are waiting for a fulfill of that hour 4 fair value gap, in which we will not only fulfill the hour 4 fair value gap, but also we will be retesting that range low level. And they are looking to long the perfect retest, right? Long the perfect retest with their stop beneath this low over here and the target being the range high. Now, some of you are wondering, Guru, why are you using this low for the retail stops instead of this low? Because retail are greedy creatures, and retail expect this range low level to hold, and they think, okay, we fall below it, then we will form new lows, right? And they are greedy creatures, and if they use a tighter stop loss, that means that the RR towards the range high will be higher compared to when they use the lowest low. Right now the RR is 6.02, and if we use the lowest low, it's only 2.69. So it makes a lot more sense for the retail traders to put their stop over here. Now, I have been teaching you guys that if price is truly bullish, it doesn't offer these perfect retests of the range low. Just like over here last week when I told you guys that if price was truly bearish after this breakdown over here, that it wouldn't offer a perfect retest of the range low. It offered a perfect retest, eventually it reclaimed, and it punished all the short positions that had their stops over here, right? So that's exactly the thing with crypto. If price is truly bullish or bearish, it usually doesn't offer these perfect retests. So why, if price is truly bullish, would it offer such a perfect retest of the range low and then bounce to the range high, right? So in my opinion, if we do get that retest of the range low, that perfect retest, I think we should see a small bounce and then go for those stop losses beneath this low, reclaim the range low, and then pump it to the upside. This would be a second bullish scenario to me, which is why personally, if you're looking for longs, you either look for longs over here inside of the bullish fair value gap with your invalidation over here, or you look for longs over here below this low with your invalidation over there as well. So potentially you can be looking for longs, something like this, in which you are going to look for longs over here, stop loss over here, target being the range high and eventually new highs. Second long position, which could also be a dollar cost average order, is that you have your entry over here, stop loss over here, range high as your first target, and eventually new highs as your second and third target. All right, and this offers a huge RR trade. Now, that second order is not my preferred scenario. I prefer for Bitcoin to front run that range low level and pump from a little higher. But if we do get that perfect retest of the range low, I expect the price to go for the stop losses of the retail traders, and I will be anticipating a sweep of those stops with a potential new order. Obviously, like I said, we already have a beautiful long trade running on Bitcoin, in which the first take profit target over here got beautifully hit. My second take profit target is the range high level, and my third take profit target is the 50% wick fill over here. What we can see over here is the Ethereum chart. And I personally think that Ethereum obviously looks a little weak compared to Bitcoin, but I also wouldn't be interested in trading Ethereum, and it's because of these triple equal lows that we have over here, right? So this low over here was put in after we filled 50% of the wick over here. So if I'm going to use the 50% wick fill level over here, we can see that we filled it exactly for 50% and we bounced towards new yearly highs. Now, once again, we found support at that 50% wick fill level twice again. Now, personally, I think that this bounce looks quite weak over here. And in my opinion, we do have a lot of liquidity resting over here. So we know that we have a lot of liquidity. We know that we have a key support and resistance area all the way over here, right? Because the price bounced 3 times from the 50% wick fill. But we also cannot forget that quarterly level of support that has been acting as support several times over here and resistance over here as well, if we extend this to the left. So personally, my only scenario that I'm willing to long Ethereum is if Ethereum is going to go for the liquidity pool over here. Mitigate it, reclaim that key support area with a break of structure, and then I'm interested in longing Ethereum towards the upside. But I'm not interested in trading Ethereum until we mitigate this liquidity pool over here. So to me, it's very, very simple. What I'm going to do for Ethereum is that I'm going to set my horizontal ray over here, I'm going to set my alert, and I'm going to wait for Ethereum to trigger that alert. Now, a lot of people are probably wondering, but Guru, you are bullish on Bitcoin. So why aren't you bullish on Ethereum? Now, as traders, guys, it's our job to analyze every chart in its own way, because every chart is trying to tell us its own story. Whenever we look at Ethereum and altcoins, we have to block out the noise of Bitcoin. We just have to look at what the chart is trying to tell us. If it does offer us a high probability setup, we take it, but we take it regardless of what our expectations are for Bitcoin. Obviously, we have to take into account our bias for Bitcoin. So if we're looking for longs on Bitcoin, we look for longs on Ethereum and altcoins. But I'm only looking for longs if Ethereum and altcoins are giving me a high probability setup. Now, in my opinion, currently on Ethereum, the only high probability setup would be to mitigate the liquidity pool over here, right? Maybe see a bit of a bounce, then mitigate this liquidity pool, reclaim it with a shifted structure, and then I'm willing to long Ethereum back up towards that range high liquidity pool, right? Then I'm looking for a limit long like this, invalidation over here, and my target over here, and that offers a beautiful RR trade. But if Ethereum doesn't offer this opportunity, maybe it might pump from here. That's fine, but then I have still stuck to my system, stuck to my edge on the market, and I haven't let Bitcoin or any other coin influence my decision making on Ethereum. Now let's move on to the most interesting altcoin out there right now, which definitely in my opinion is Solana. Last week we nailed Solana on Wednesday's YouTube video and during Thursday's Twitch livestream. Both plans and trading scenarios played out to a T, which was way too clean. But right now there's a new trading setup being developed on the Solana price. Because what we can see over here is that Solana had a beautiful deviation of the range low over here. And also we can see that Solana has shifted structure back towards the upside, right? Because after forming this fresh low compared to this low that brought us to this fresh high, we formed this lower high that brought us to this fresh low that brought us to the deviation of the range low. So we have a confirmed deviation, shift this structure to the upside, and we have this unmitigated untapped liquidity pool at the range high. So technically speaking, the range high should be next. Now, we always want to enter where retail is getting stopped out. And I think if we move to the lower time frames, we can identify two interesting liquidity pools. We can identify the liquidity pool beneath this low over here, right? And we can identify the liquidity pool beneath this low over here. So we have identified two liquidity pools. The first one is a true liquidity pool because of this fake break of structure that is being occurred on the chart because of this impulse towards the upside over here. People FOMO into longs, people build longs on the pullback, and they have their stops over here. Now the second one is this one over here, because this is where we have the perfect retest of that range low key level, right? And retail identifies that retest and thinks that if price falls below this perfect retest of the range low, then we should continue down lower. So a lot of people are using this low to cover the stop loss of the long positions that they FOMO into on this impulse or on the pullback over here. So in my opinion, there's two ways of getting into a long position on Solana. The first one being is if we go for the first liquidity pool over here, mitigate it, start building long positions over here beneath it. Invalidation can be somewhere over here. First target can be the range high liquidity pool for a potential RR of 2. Like I said, we also have this bullish fair value gap over here aligning beneath that sell side liquidity, right? Bullish fair value gap over here aligning beneath that sell side liquidity. We do not only have the bullish fair value gap aligning there, but also this previous supply candle over here on a 4-hourly time frame that aligns with the bullish fair value gap. Previous supply now turns into demand is what we call a breaker block. If the breaker block also aligns with a bullish fair value gap on the same time frame, is what we call the unicorn setup. And that's where you might want to potentially enter on Solana with your invalidation over here and your target, like I said, being the range high liquidity pool for an RR of 2. Now the second order could be beneath this sell side liquidity below the range low, right? Same invalidation, same target. Now you're probably wondering, but Guru, we are having this key level over here, this quarterly level, and this range low level over here. And you are entering below those support levels. Why are you not entering on top of those support levels? Because usually To trade those key range levels, you want to wait for deviations below them if you want to long, or deviations above them if you want to short. Usually the first retest, which we're seeing over here, the perfect retest, is not the true retest. Those perfect retests of those key range levels are designed for market makers to let retail FOMO into longs, put their stops beneath those perfect retest levels. They mitigate those liquidity pools to fill their own orders, then reclaim those key levels with a shifted structure, and that's where we want to position ourselves into a long to target the range high liquidity pool. So that might look, for example, something like this. Deviate beneath the key level, shift the structure, long it over here, back up. Deviate beneath the key level, with the shifted structure, reclaim it, long it back up towards the range high liquidity pool. All we have to do as traders is identify market structure, ranges, liquidity, wait for deviations of those key range levels, identify market structure and a flip back towards the upside or towards the downside if you want to short, and then use the tools such as fixed range volume profile, such as EMAs, such as Fibonacci retracement to identify our POIs where we want to execute our trades. To wrap up today's video, let's quickly discuss the sponsor, which is Prime XPT. They now also offer crypto futures trading next to trading Forex and commodities. In my opinion, the best place to trade Forex and commodities with your own funds. You can find our link in the description, and if you deposit using our link, you will also get a 7% deposit bonus. Now, if you guys do have any questions after watching today's YouTube update, feel free to let me know in the comments down below. Make sure to smash up the like button, make sure to subscribe to our YouTube channel, and I'll catch you guys on Wednesday's video. Ciao, ciao!